Good morning. All right. Let's get some charts up here. And I guess the question was yesterday, the dead cat bounce or the bottom? Well, I'd say initially, just looking at this chart, dead cat bounce. Blew through all of this support. So trading range has been broken. However, it closed back into the range after the bounce. So as we look at this, if I was to change this, and this is the futures, take a look at the cues. If I was to change it to a line chart and would say, well, the trading range is still intact, which makes it, I guess a little questionable. I mean, it did go through it, but the close is there. And so we'll just have to see how it plays out. That being said, we go to the weekly chart and wide range bar down. And as always, the same analysis of give or take, does it stay in the lower half of the wide range bar? This down here, it's got, trading range up, down, up, a little breakout failure, back down, stabilization here. It's technically what we call just a mess. Now, if it stays down here, how long does it have to stay down here? Well, I don't really know, but the longer it stays down here without a significant bounce, the greater the probability that it's going to go lower. So now that it's formed this bottoming tail bar, buyer stepped up on that dip and goes sideways down here. I would say I'm kind of, going with the thought that if it doesn't make any kind of a significant move, at least up toward that 20 MA, which is, subjective. It's a moving average. There's nothing to the left. And that is if it can get up there, at least it shows some attempt to recover. And if it stays down here, well, then the probability is, by the end of the week, it's going to dive again, if not earlier. So now that it's come up here, it hits this area of resistance to the left, these overlapping, bodies here, which you can see it's right there. And so one of the concepts of MTS is that when you see overlapping opens and closes, you're going to see a base in a smaller time frame, and this is a good example of that. So as you can see, the crosshairs lines up there. You can see that base that is occurred there to the left. So as it came up into there, this morning, got knocked back down, and now it's on this support. And does it hold? And wide range bars are range expansion bars. So usually when we talk about wide range bars, we talk about a complete bar with the open and closes at the opposite ends. Well, this is a range expansion bottoming tail bar. So bottoming tail bar clearly says buyer stepped up on the dip and it was a big rally. And now there's a void below, which leads to the next MTS concept. And that's why when you take the MTS course or the swing trading course, I call them thought building lessons, because each thought building lessons builds on coming together as to a bias and a direction as to what should happen. And then, of course, strategies to trade. So it's got to now create support, which it began to do here overnight. And does it hold here and chop around? The longer it goes sideways here, right, versus right back up again, is we see a upside shakeout. And as it goes sideways, you might say, well, then this starts to take on the look of a head and shoulders type of a top. Right? So it depends on how much it can retrace from here. If it retraces, maybe that. If it stays flat, obviously more bearish that it can't make that right shoulder, and it could come all the way back down again or somewhere in between here. I know there's looking at this, there's going to be some support in this area. It's probably, where is that? 15 or right here. Right. So, the idea of overlapping opens and closes coming together is going to be some support. But now, we're interested to see if it actually can hold this level right here. Now we'll look at other futures contracts to see where they're at. This has been showing relative weakness. And so we'll see if that's still the case. Let's look at the Qs first. So, the similar break, this is what we looked at yesterday as to an area of support, and it moved down through it and then came back up above. It's where it initially had gapped down to, and then lower. And now we've got this reversal, which we'll see sideways, up, or whatever. Got a little extended to the downside weakness. And even after, a break, what we call a greater than 100% retracement typically leads to some type of stabilization and an attempt to, move back up. So it's at 379.50, 379.50. So within the range here. Coming back in, and it's going to chop around. So sellers coming back, breaking some support here. So a little weakness. I think we're going to have a whippy kind of a day going forward here. Taking a look at Russell, trading range now. Back and forth, bottoming tail bar. Similar pattern. Move up, coming in, void below. As I look at more of this, I start thinking, be careful, frog in a blender pattern today, which isn't unusual. And what is that? That means just erratic price action. It isn't unusual after a range expansion day where, the obvious sellers in control, bearish price act, buyers step up again. Is this over? Are we going up? Is it the dead cat bounce? All of that creates uncertainty in the moment where institutions and traders need more information. And when you need more information, there's that uncertainty about what's going to happen next. And it tends to be choppy and erratic. And, understanding that keeps us out of trouble. Meaning lots of commission generating trades that could be small wins and losses. And sometimes those kind of days, you get little movement, and the chop back and forth can lead to substantial losses, even though things don't move much. So, be careful today. Don't get too aggressive. S&Ps, dip down into this area there. This is what we had marked off yesterday. So it came down, crunched that up. There was this little congestion there, and it did make a nice bounce. And that weekly chart really doesn't look bad at all. While this was a nasty move to the downside, things like this happen. It's still in an uptrend. And, we covered the idea of this void and what had happened. So we'll see how this all unfolds. Financials have been doing better in oil. And that's why we even have the Russell, that just looks like a relatively normal, benign type of a pullback after, a little breakout failure there. We're seeing the same pattern of the dip and the move up into resistance and the pullback. Sure. Buck wants to look at the spiders, which, we talked about if it was to get down to the 200, what the percentage correction would be. And so the move down, the dip, recovery, it's the same story. Is it at a dead count bounce? Is it going to go sideways? Excuse me. You've got this resistance right over here. You see the pullback. It's how many times have I said it over all these years? Look to the left, and I keep saying it, and I'll keep saying it and saying it to enlighten those new to the markets that you don't need all of this esoteric type of indicators and proprietary numbers to find support and resistance. It's just that simple. Look to the left and see if there's some pivots or congestion. And you see buyers beginning to stabilize it here. And we've got overhead resistance, which leads me back to my bias today that I'm taking into the morning of, things look like they could be erratic until the uncertainty dissipates as to what happened, over the last week or so in the recovery yesterday. Powell at 10 o'clock. Thank you, McGraw. I'm a little lax sometimes with being updating on the news, but so appreciate that. So same story, recovery, look to the left, getting rejected here, short-term, pre-market. We'll see if this begins to hold, or whether we're going to get this measured move to the downside. Crude oil continues to grind higher. And this is, one of the things with technical patterns that, one of the reasons of many why I came up with this concept of bar by bar analysis years ago is that technical patterns don't always do what they suggest they're going to do. Meaning, this was in a really nice uptrend and it got all wild and choppy and erratic. And then the move down, which suggested, hey, this should continue to go down. Like over here, you can see with the crosshairs going back and forth, coming back down to here. It didn't happen. It's marching, grinding its way back up again into this congestion. And so sometimes, even, these power bars or wide range bars that we talk about creating voids, they just don't follow through. So you need part of your method that guides you to shift that bias. And breakdowns like this and recovering right back up again, that kind of power reversal is one of the ideas behind that we use, or concepts that tell us begin to shift the thinking from, hey, this is nasty and it's going to go lower to, that's not playing out the way it seemed to be. So shift and go with what is. Right. Silver, the market's been really erratic, and this is not escaped any of that, up, down. And gold has been the same, very erratic. Transports, holding up relatively well, but pretty messy. Gold futures, converging MAs. Yeah, and you know what, Thane, it's not converging in a constructive way. And you might say, well, what does that mean? Well, sometimes converging moving averages come together to point out to an inflection point where a contraction in volatility is going to expand again, or in a direction of a trend. Whereas this is a picture that is communicating through the eyes of the moving averages is stay the hell away, because the whip is so moving back and forth, but the closes of what's happening are relatively in the same place. So if we were to change this to a line chart of the close, you see that they're clustered around here. So it's just whipping back and forth. And another way of viewing that is opposing pivot highs and lows. And so this bar will become a pivot the day after tomorrow. So we need 3 bars. So depending on what it does, assuming that it's the closes stay above here, it'll do that. But this picture of moving averages just communicate to stay away in this time frame. Clearly, you can trade it intraday as it's whipping back and forth, but from a swing trading perspective, this picture, you're going to get chopped up, right? All right, there's one euro. doing absolutely nothing here, flatlining. The dollar was, something that was in the news quite a bit, and it's just consolidating after its move up. So, set alerts above and below. Um, bonds, the big drop in the rise in interest rates, inflation, and, it's one of the things we cover. And looking at this, and it's, back up to where it was previously, where the markets really didn't mind too much. Now they mind it. And so up at a high level, and then set alerts and see if this moves one way or the other here. Just that move up suggests buy the pullback, and interest rates going higher at this point has positives, though financials have been doing better. But eventually, points to some inflation. But the positive side of it is, if this is more than inflation, usually when we see interest rates start to move up like that, it can be a positive because there's a demand for money. And so is the economy getting better? I don't think that there's anything conclusive about that. So moving up could be a positive, and right now it looks like more of a negative as the market's reaction to it. So just kind of back to the uncertainty that's happening right now, and be careful today not to get too chopped up in anything. Yours, Dan.
Good morning. Yeah, all good advice as usual. And whoever posted those things going on today, we know about Powell, but then you said two other things going on. So thanks for that. Always good to know, even if you're not sitting there staring at it, to say, oh, this is happening today. So there's a possibility of bank shares, whipping around and this and that. So, yeah, Powell, they're going to be grilling him on inflation, right? So we know that. And tomorrow is CPI, we know that. So we'll just take it. But it is a little bearish to me that we had such a big gap up this morning, and it negated it all. But if it did gap up, we would have been sidelines anyway. If you were holding things overnight, had this big run from whatever, 1 o'clock, and gap into resistance. So now actually this is it's a controlled pullback. So we, want to see what happens. Is it going to hold here, fail? You know the drill. But I posted a big list of put spread ideas. Let's go through them here. Our opens are fine. Just glancing. We have a Tesla put spread, nice reversal, looks fine. We did spiders naked, Qs naked, Netflix naked. So we love selling puts when volatility is spiked and we get our bullish turn. All right, let's just go through a big list I have here of miscellaneous stuff. How this is a wide range igniting bar. I know we were scanning the sector down here, Greg, and that's when we got into CVX. But this little middle chart's my monthly, and this is my weekly. And so when I saw this morning, I said, "Wow, look at the monthly here." Now it's at the top end of a trading range. But this is a multi-year trading range at resistance, and this has room to $35. So now multiple time frames, we're climactic on the daily. Nothing to do. So I'll watch it. You all know sometimes I'll watch something for a month before it sets up, but I'll take that duty. I'll watch that little boy. S Bev. I don't know if this is one of those marijuana beverages, is it? Does anyone know? Wow. I'll bet those tails are real too. That looks like a Reddit boy toy. But nice little gap here over this base. So something's going on today. AA getting a downgrade. No great pattern. Today's Tuesday. Under Wednesday's low, it might be a call spread, but I'd still rather pick on weak stocks. 12. Wow, this is gapping up off the charts. I don't like the way it trades, but it could set up intraday. AMD got an upgrade. Yeah, this is nice. Gapping up, very controlled pullback here. Down a couple bars, reversal. We'll take a look at it. Google, very potent reversal yesterday. Bottoming tail range expansion engulfing, and it's holding pretty well here pre-market. IBM got a downgrade. This is a call spread candidate over the red bar. So I have IBM in the middle here. I still have LSID here from yesterday. And Janet, it still looks totally fine. LSID over yesterday's high. It's a bull 1, 2, 3 with a price void. PKI. We're going to be doing an MT live coming up here in a couple of weeks called The Turn. And the turn happens in different trends. Now this one traded under a prior pivot low, but it's on major support down here. And this is a beautiful 4-bar turn. You got the bottoming tail, you got doji, but then you got the gap negated engulfing closing bar with a price void. So I like that as a maybe 30-minute high directional and or a put spread. Let's watch. Nari, you know, not the same, but similar concept. That's a put spread idea. Gap in at 379. Illumina had earnings. I think it's a bio, and that's too sloppy. I got no interest. DHR. Here's another one. That's what we call a buy setup at the 200 with a potent 180 reversal. That looks great. Can we put that in a window? DHR. FFIV. Here again, the turn. See this beautiful turn, 100% to the 50 to major support. That looks, I did look for put spread on that yesterday, but it's way too spready. But over yesterday's high, depending on what the market's doing, that's a directional watch. CVS, I think, got upgraded, a little sloppy. Hewlett Packard, I've been watching this one for a while. Look at that, a gap breakout. And it's going sideways. So that looks great. ACCD 2194. So that's just, it's a bullish gap in a downtrend. So I would only really be interested in day trading that if it's set up. Win got a downgrade, no pattern. Mr. Big, it's something with earnings, I don't know, or I don't know, but big fat trading range. Actually, McGraw, a condor. If we can do a 40 and a 50, see it's gapping to 44 right here. So that's there you go. That's a condor candidate. A&F, no interest. SNX came down pretty hard, but possible. I don't like that this move down also started from a 180 breakout failure, so I'm just going to get rid of him. ACI, I think at earnings gapping down, no pattern. Riven, they gave a delivery report, what they expect by the end of the year. So, you know, I don't give two hoots about what the actual number is. I really don't. I don't care. All I care about was, okay, let's see if the market's happy with that number. And it's not. The market's not happy with it. It's gapping all-time lows. So that you know, pity the people who bought this, because this was all over CNBC. Couldn't stop talking about it. This new IPO. Remember their valuation here without producing one car was like more than I think they said GM and Ford combined. That's just stupid sentiment. And this is a picture of fundamentals catching up with reality. Debbie gave us Splunk yesterday. This is on our list, both for a put spread and a directional. It's holding well here pre-market, so that's a tier one setup. And I define tier one as it's you know, ready to go once I get some confidence of market direction or you know, not following whatever. You got multiple time frame alignment showing relative strength. Walmart. Debbie loves triangles. She would tell us what one this was if she were here. But it's an ascending triangle with a slightly lower pivot high tops. So a little bit of a symmetrical triangle feel. But I'm going to set an alarm at 145.25, because if that can break out, it has nice room on the daily there. $145.25. Lulu has been getting hammered. I like you know, I like the reversal bar. It's not a directional. I like the volume and the reversal. You know, maybe 30-minute high. We could consider a put spread on that just for Friday. Cisco made the turn here. I don't like the fact that it gapped up and it's getting slammed here. We'll come back to you though. Oracle, another making the turn at the 200. UNH, we were watching yesterday. Also deep retracement, but it had a nice, you know, 2-bar turn, and now it's gapping up. This would be 30-minute high trade and put spread idea, but the options are fairly illiquid. Cross, I just had an alarm go off. Yeah, this one's fairly light volume. But you know, maybe it's going to come out of a coma. It has a huge price void, so I'm going to put that in a window. Cross, Invax, possible put spread just because it's down a lot from the prior highs. Beyond Meat over yesterday's high now would be an adequate put spread. Nike we were watching yesterday, just got you know, possible a little exhaustion gap, but that's not getting off to a good start right now. The Hewlett Packard still is, that's one of the strongest things out there. Look at those, look at these moving averages. I actually said that in the video last night. I said, if you take the candlesticks off, which is what we do when we do our MT live and we go on this subject, find me any stock that has beautiful moving averages like this. 20 railroad track 50 above a rising 200. That's a beautiful, strong arrangement right there. Janet, your LCID bottom right is perking. IBM middle window. Call spread if there's anything above here. There, my LCID alarm just went off. Yeah, detected. That's what I thought. DHR, but it's a nice pattern. It's a beautiful pattern, detective, for a put spread. Like beautiful, no brainer. The 295s you could even do, because that's that 15-minute shelf. But that's a veto. Illiquidity is a veto. IWM actually holding the best on the 15 right here, but no pattern. So we're just chilling here, going through our watch list. FF5V. I don't know if that gap up was real. I'd prefer it if it was not real. Bitcoin down $750. So this Mister is just on my permanent watch list for selling options just because it's so juicy. Trump, DY.